This video is a review of Japan Tobacco's fiscal year 2024 full-year financial results, period from January 2024 to December 2024. JT, Japan Tobacco Inc., is a major Japanese multinational tobacco company. JT was originally a government-owned entity, but was privatized in 1985, and the company operates globally and has expanded beyond tobacco into pharmaceuticals and processed foods. 2024 consolidated results. On both constant FX and reported basis, revenue and adjusted operating profit increased by roughly 10% year-on-year, while net profit decreased by 3.9%. Constant FX is computed using the same foreign exchange rates as in the equivalent in the previous fiscal year, and a reported basis includes the effects of currency fluctuations. JT's revenue increased due to strong pricing in the tobacco business. This means JT was able to charge higher prices for tobacco products while also selling more processed foods. AOP, adjusted operating profit, also grew mainly due to stronger performance in the tobacco and processed food businesses. Additionally, the acquisition of VGR contributed to the growth. VGR refers to Vector Group Ltd., a company that operates in the tobacco industry in the U.S. FX foreign exchange impact was unfavorable. JT faced a negative impact on adjusted operating profit because of depreciation of Russian ruble. Operating profits from those regions decreased when converted into Japanese yen. Operating profit increased, while profit decreased. Higher financial costs outweigh this gain, leading to lower net profit. FCF, free cash flow, decreased. JT had lower free cash flow because it made payments related to acquiring VGR, Vector Group, reducing the cash available. For fiscal year 2024, JT saw strong revenue and AOP growth, but unfavorable currency movements and higher financial costs affected overall profit and cash flow. Both net profit and earnings per share have been stable for the past few years, which is not bad. 2025 consolidated financial forecasts. For fiscal year 2025, JT expects both core revenue and adjusted operating profit to increase year-on-year at constant foreign exchange rates. Revenue is projected to grow, mainly due to price increases and the inclusion of VGR, Vector Group, in the tobacco business. AOP at constant FX is expected to rise, primarily driven by profit growth in the tobacco business. However, on a reported basis, AOP is expected to decline due to the negative impact of foreign exchange fluctuations. Operating profit is expected to decline, mainly because of lower AOP and higher trademark amortization costs related to the VGR acquisition. Net profit is also expected to decrease, as the drop in operating profit and higher corporate income tax will outweigh the benefit of lower financial costs. FCF, free cash flow, is expected to improve compared to FY2024. This increase is mainly due to the absence of one-time payments that were made in the previous year for the VGR acquisition. Although profits are expected to decrease in fiscal year 2025, the dividend is planned to remain unchanged at 194 yen at least. Business Plan 2025. JT aims to prioritize business investments and seeks to maintain a balance between reinvesting in the business for growth and providing returns to shareholders. JT is committed to enhancing shareholder returns by achieving mid to long-term profit growth while maintaining a strong financial position. Dividend payout ratio target is approximately 75%, which is considered competitive in the capital markets. JT may also consider a share buyback program, depending on the company's financial outlook for the given year and its midterm capital requirements. JT's shareholder returns are always much more aggressive than other companies. JT Group's Canadian subsidiary litigation update. JT has faced legal challenges related to smoking-related health issues in Canada, but JT announced an update about this lawsuit. Japan Tobacco, Philip Morris, and British American Tobacco have agreed to pay 32.5 billion Canadian dollars, 3.56 trillion yen, to settle their litigation in Canada over health risks from tobacco products. For the settlement, Japan Tobacco plans to record nearly 400 billion yen in loss allowances as sales expenses. The three companies will continue paying amounts calculated based on their earnings until the sum of their payments reach the agreed level. The proposed settlement is subject to court approval. Although the settlement still requires court approval, JT has confirmed that its planned dividend of 194 yen per share for fiscal year 2024 will remain unchanged. This was JT's biggest concern, so it is good news that a settlement is in sight. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 3,858 yen as of March 6th, and the US dollar stock price is $12.94 as of March 5th. Current PBR is 1.69 and PER is 15.2. Dividend yield is 5.03%. Compared to previous few years, regarding PBR and PER, current stock price is relatively cheaper. However, the dividend yield percentage is lower, but 5.03% is still a high-yield dividend among other Japanese stocks. JT's stock price has been recovering since the announcement of Canadian subsidiary litigation update. Conclusion. Update for settlement of the Canadian lawsuit was positive news. Tobacco business always has some problems, such as health hazards, but JT's financial status is fine and stable. JT declares a continuous strong shareholder return policy, and you can still expect good shareholder returns, including high-yield dividends.